Well, welcome along traders and friends, market participants and enthusiasts to the first market update for the year 2018. It is Wednesday, the 3rd of January. It is great to have you watching along as I break down the US financial markets and of course recap our top 12 individual trade lists on the left-hand side of my screen. It has been a relatively quick start to the first abbreviated week's worth of trading in the year 2018. A little bit to talk to you about. However, I will begin with the broader market indices themselves, then move into our top 12 individual trade list. Now, as it stands, the Dow Jones Industrial Average is very close to breaking out above our 24,909 area. Today, we flinched above it. However, we didn't get that definitive cross above that level. So wait for that cross before you jump into any diamond positions. Now, outside of the Dow Jones Industrial Average, which again is still in that sideways stair step, but as it looks, volume is trickling back into the markets, and it appears as though it is only a matter of time until we get that definitive move above this trigger here. You can see for yourself when it comes to the S&P 500, if I just move my trigger across to the right-hand side, you can see that it is leading the Dow Jones Industrial Average to the upside. It does look like that we do have a true legitimate breakout. You can see on my screen here, 2,698 was that bullish breakout trigger. We have moved above this. We closed as at Wednesday, 2,712. So if you did have the SPY triggers open, you should be in this trade as it stands, and it has been a relatively good day's worth of trading activity if this is one of the first trades for 2018. Obviously, we have been triggered into a bunch of individual trades also, which I will recap you on, but as you can see for yourself, it looks as though this trend is continuing. Now, if I bring up the NASDAQ again, you can see it didn't take all that long for the NASDAQ to offer us once again another trade if you wanted to take that directional trade on the Q. 7,013 was the breakout trigger. Again, this was more so resembling that of a bull flag, but we really started to see the activity flow into the market on the first trading session of 2018. This is Tuesday's candle, a very nice one white soldier, and again today we've got a long day shaved top Marubozu candlestick sort of continuation trigger, which took us not only above or flinched above 7,013, we blew right above it. We have a small little gap here as well, which will be interesting if we come back down and retest the open gap, but you can see we closed up just shy of 60 points. So a little bit of activity here, especially on the S&P 500 and the NASDAQ. Again, just to reference or just to reiterate that the Dow Jones Industrial Average, although it did ever so slightly flinch above this bullish breakout area, we haven't closed above it. So technically we don't really have, we're very close to having markets in agreement, but this is pretty much all systems go really for the first abbreviated week's worth of trade in the year 2018, which brings us into our top 12 individual trade list. Now, as you can see on my screen, the candles today on Apple, it really isn't all that bullish. However, what is good is that the upper wick that has just been produced as at the close on Wednesday has now definitively closed the gap, dating back towards the end of 2017. If you pay attention to the low, so this L here, this stands for the low of this particular candle just here. It's coming in at 174.50, and if you pay attention to, if I can just remove this, the high over here, and if I hover my mouse over today's candlestick, you can see it's coming in at 174.55. So we overlapped it by 5 cents. What this is telling us is that we have now closed this gap. So although this upper wick is ever so slightly bearish, in context of this gap, this open window, it has now closed, and we really wouldn't expect anything else other than a little bit of resistance pressure or selling pressure coming off the top of this open window, which is now being closed. So Apple is pretty much break even. We do not have really overwhelming directional trades on this at the moment. Yes, we do have the close at 172.10, so I still think that this is inevitably going to break to the upside. What it has been good is that although this gap has been rather bearish, it has been neutralized as at the close on Wednesday, and I'm personally looking for Apple to continue not only back up to 175, but ultimately above 176, and then to continue on its bullish ways to break out above 177.66. This is a fantastic trade under construction. We have been in that of consolidation. All right, but as we have just closed this gap and we're holding this support area, not to mention, of course, these rising exponential moving averages and what has essentially been the backtest of that rising 50 exponential, which is hold, this is all very bullish for the future moving forward for Apple. So I just wanted to update you on that particular stock. We've got Amazon, which is very close to breaking out. It hasn't done so yet, but we still have, or we do have, two very nice bullish candlesticks under construction. If we are to see another long day white Marubozu, this would essentially be three white soldiers, which is a very strong, a very healthy bullish continuation pattern. We'll have to obviously assess what happens on Thursday, okay? So we'll have to pay attention to the candlestick which develops on Amazon tomorrow, but it looks as though this is on the precipice of breaking out as well. Now, Boeing Airlines has been a fantastic trade above 267 and 279. We hit our target at 299. This was almost in the final week of trade for December, but we're still more or less moving sideways. So as I spoke about over the weekend, Boeing Airlines is something that you pretty much have to forget about at this particular point. You've got that ADX, which is very much so extended, and it just needs a little bit of time to recalibrate and also to rest until we can continue that bullish theme, and also trend, which is very strongly under construction and underway. It just looks as though we need to rest. Now, if I continue this into Baidu has triggered in the month of December above 238. I was talking about, again, as we drill on back down into this support area around 230, the longer we hold it and we start to build positive divergence, the more bullish this picture becomes. And as you can see, if I just go to the weekly chart, we are already up $11.73. So even above this 242.93 trigger that we very closely hinted at yesterday, we have now fully moved above this. Although we do have that of a hangman type of candlestick, we're not really at a very strong resistance area. And this is looking as though we are on the precipice once again, or very early on in the instance of potentially getting that definitive bounce off from this level, which should take us all the way back up just shy of 275 at a minimum. So I am excited about that Baidu trade, which is triggered as well. Now going into Caterpillar is really taking the sort of the same formation as Boeing Airlines at the moment. It needs time to rest. This has been an absolutely incredible trade, as low as 140, 143, 145. There were some of the past or most recent entries since the month of December, but if you go back in time, we were starting to jump into this at 115, 116, 119. You can see on my screen, I never change any of these triggers. When I do change them, however, they are just to be simply deleted to free up some free area on my chart. But you can go back, and this has been really one of the best performing individual companies or select individual stocks for the year 2017, but this has hit our target pretty much to the level at 158.39, which is a Fibonacci expansionary level, which I sort of went through a number of months ago. Very happy about this, but this needs some more time to develop until we're comfortable to start setting up some contingent orders for that continuation. Also, a major warning on COP. COP appears to be breaking out of that bull flag. So you can see for yourself, we closed up $1 today, or 96 cents. I think it's only a matter of time until we break above 56.90. Again, this looks like a bull flag breakout. Just monitor this. We don't have necessarily the volume that we'd like to see, but however, the seasonality, or at least considering the seasonality of it all, it doesn't surprise me that once again, volume is rather low across the board. However, when we move into CVX, CVX has continued. So again, this is a trade that we've been in at 120, 121, 122. We've gone through, again, a very short-term consolidation sort of stair-step pattern, and we broke out of this yesterday on Tuesday. So you can see, if I can just move this over to the right-hand side of my screen, just to bring up the dollar value of Tuesday's move, we were up $2.39. Today we continue to climb up another $1.11. This is a very profitable trade depending on if you got in at these three entries. It is also relatively profitable if you got in most recently yesterday at 126.79. We're trading up just shy of 128.70. So a pretty decent trade here. Again, we're just going to have to follow this as the trend continues. You can see the exponential moving averages are still separating, prices accelerating away from them, and this is looking like a very strong continuation signal to the upside. So a pretty decent trade there again on CVX, really to start 2018. So as I alluded to at the beginning of this particular market update, it has been a relatively fast start to 2018, which is good. I mean, personally, I came into the week and I was thinking to myself, well, a lot of the oscillators on the actual indices themselves are appearing to roll over, and I thought it was going to be one of those weeks where we had to sort of sit through that of a pullback. However, vice versa, so to speak, we are just continuing to the upside, which does come as a little bit of a surprise to me. But at the same time, if you have those contingent orders open and you understand the direction of the prevailing trend, there's no reason why you shouldn't be in these trades, even if it sort of throws you that of a curveball. And it's a very important lesson anyway when you technically swing trade the financial markets. All right, very, very important. But as we continue, you can see also Google is breaking out of this sort of elongated sort of bull flag as well. 1,070 was the bullish entry. We triggered this yesterday. Today we're up above 1,088. You can see on my screen we're closing up at 1,092. So a quick $22 from 1,070. If you tie in, of course, those derivative contracts on the call side, this has been another very profitable trade to begin 2018. And this is just looking as if it wants to continue. It wouldn't surprise me, however, if we sort of linger just below 1,100. But If the bullish trend continues, I have absolutely no doubt, and I mean when I say the bullish trend, I'm extending that through to the Nasdaq. If we really start to see the continuation of this, I have no doubt that that Google is going to break firmly above 1,100 and continue its bullish trend to the upside. This also, of course, extends into Apple. I spoke about Apple a number of minutes ago, but ultimately once we get above 1,077, this is still going to trend, also going to trend. You should be thinking about potentially that 2,000 psychological round number acting as a magnet for Apple moving forward. Okay, I'm not saying we're going to get there in the month of January, but a lot of these tech companies are obviously tied in together. And it firmly bases on, of course, the Nasdaq continuing its bullish trend, which at the moment we have no definitive signals that it wants to reverse the current trajectory of its bullish movements, which is fantastic for us as well. So things are looking quite good. Goldman Sachs continues to sort of linger around this area. Now, although it isn't profitable at this particular point, as long as we remain above 252, this is just short-term consolidation holding above this macro resistance area. So if I zoom out a little bit, this has been a very important resistance area. We've slowed down here in the past, if not a little bit lower, but this is all quite good. If we break out, we retest this pivot and then bounce. It is technically a sort of a retest, a 1, 2, 3 back test, and then we've got the true breakout on Goldman Sachs. We are still holding up and firming above the exponential moving averages. We are sitting on the 20. Generally, we do turn up and bounce off the 20. We don't have to, but we still have this a little bit lower area of support sitting in here at about 251 as well. So pay attention to that at Goldman Sachs. It is looking quite good. Now, today also, this is what also, when we talk about curveballs, so to speak, if you set up contingent orders, even on the brackets, I mean, IBM and Netflix are fantastic examples of this. 158 was the breakout entry. Now, I personally didn't think IBM was going to get there as we moved into this week's abbreviated trading week. I mean, this was the close, last trading session of 2017. We opened up yesterday at 154. You can see the gap acceleration to the upside, 158.04. So this came as a little bit of a surprise to me. It is bullish. We did close up $4.30. But again, a pretty decent move in IBM. Pay attention to this. I suggest, of course, that you place your stop at about 155, 156.03. A little bit of wiggle room below the open of this gap here. We do have earnings coming up, so I'll be speaking about this over the weekend as well. But that was certainly one of those trades that I did not expect to actually enter into this week. However, I'm quite happy that I actually am in it, and you should be too if you are in IBM. Now, the other trade is Netflix. Netflix, we had the bullish entry open at 199.87. We also had a bearish entry at 177.94. Well, surprise, surprise, the bullish trends are continuing. We broke out above 199.87. We're all the way up at $205.06. So take your pick on any of these trades. They're working out pretty nicely at this particular juncture. I'm not sort of expecting anyway for these to reverse whatsoever. We still have earnings, which is coming up towards the end of January, but we still have enough wiggle room or enough time, so to speak, before we're forced to actually liquidate out of any of these trades at the current time. So pretty decent trade set up there. And also to really round out, actually I'll recap Facebook too, because this is also another stock that we've been speaking about. It has taken a little bit of time to really form, but it's the nucleus of a good trade setup is there, and it's really accelerating to the upside. But before we get there, we've got Tesla. Tesla's going through all of the movements we expected to go through. However, I do not have a bearish trade. You see this dotted line on my screen? Whenever I have a dotted line on my screen, it means that although I agree with the trade setup, it's not enough for me to actually jump into it. So occasionally you see these dotted lines, and just a heads up, when you see them, it means I'm not acting personally. But as you can see, we closed down below. This is a bearish entry, by the way, off the retest of this resistance area and this resistance area, which is taking us essentially back to retest that of potentially a major neckline on Tesla. So if I have to make one prediction, really for the first quarter of 2018, and I really don't like to do these types of things, but sometimes, say for instance, when it comes to Caterpillar, where we've got a really good trade set up in a really laser focused area of resistance or ultimate target, I like to sort of share these ideas with you. It doesn't mean that I'm necessarily right, but I think it's in your best interest to understand what may be ahead. And the more I look at Tesla, so to speak, and I see the retests, the sort of sell-offs, the high retest, which is essentially where we thought it would go to, and then the sell-off, it's looking quite bearish, honestly, for 2018. So I wouldn't be looking to jump into Tesla. I'm just sort of monitoring it around this sort of 325 and all the way up to about 340 area. If we really start to see a continuation of bearish signals, and if we start to see again the rejection at these exponentials, not to mention the neckline of this major sort of head and shoulders sort of macro topping pattern, Well, then Tesla really has some major hurdles to overcome if it wants to, of course, rally up above or up to 375 to retest some of these past old-time highs. And then, of course, to get above them. I think at the moment, the benefit of the doubt is really suggesting that we are going to see lower prices for Tesla, at least in the first quarter for 2018. I'm not sure how we're going to close towards the end, but this is all a very bearish picture that I want you to be aware of, or at least potentially you can write down. Now, going into Facebook, Facebook is really the last stock. It's not in our top 12 list. It once was. It went through a period of rather inactivity and a little bit of a period of whipsaws anyway. And although it has sort of produced those most recently as well through November and December, you can see it very much so strongly sort of accelerating to the upside. So we've had a number of entries on this. 182 was the first one. I mean, potentially back as far as 176.48. We went through a very quick pullback. We did have a green box here to suggest that as long as we remain above 172, this is still bullish. And you can see since then we accelerated again very wildly above 178. And now we're all the way back up to 184.58. So profitable on this. It has taken a little bit of time to get there. We have to expect a little bit of volatility on Facebook. But at the moment, and if you had that secondary entry open at 178, you're looking pretty happy at the moment. And again, 184.58. Just be prepared, of course, for a little bit of market noise, a little bit of back and forth choppy action. But once we definitively close above this area, which we have done as at the close today on Wednesday, and if this really starts to begin trending, you can see the CCI printing above 100. You can see the ADX, it hasn't definitively turned up, but it looks very close to doing so. These are all signals that we are beginning into that of a bullish trend. So very important update on Facebook. It looks as though we're breaking out, and it should compensate and pay us off very well over the coming days, if not weeks and months, as well as we move into the first, or at least settle into the calendar year of 2018. So on that note, everyone, I wanted to wish you a very lovely evening. I'll be back with you tomorrow for another market recap, and of course, over the weekend in that pro analysis class on Saturday. It's James signing off on behalf of Pivot Point Trading. Pardon me. Have an enjoyable evening. Goodbye.